Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, September 28, 2015, and this is the daily report for gold and silver. Major meltdown across the board in the precious metals markets, the commodity complex as a whole, and the equities markets. We were stopped out of our trade. We'll talk about that in a second, but first, the current price, 1131.90, call it 1132. It's traded to a low of 1128 and change, and a high of 1148.29. So traders, to say that this has been a difficult market to trade in would be an absolute understatement. This market has had extreme volatility, extreme swings, and been under extreme pressure. We did take a long position at 51.50. We got out roughly at 32, loss of just shy of $20 on the trade. It's not something that I am happy about, but it is something that we need to report. When we look at this market, it has broken through what I consider to be pretty critical support, roughly at the 1133 area. That's why we had to stop just underneath. If we were going to find some sort of support, we're either going to find it here at 33 or here at 21, but we have extreme pressure that has entered the market. There's no doubt about that. So that when we look at the basic timbre of the market itself, of course, we did make the bottom at roughly 1070. We had a $100 rally. From there, we broke through the 61% retracement, but not quite to the 78% retracement. And then this last leg, which goes from roughly 1100 up to these tops at call it 1151. We've now seen this market have a lower high, although it's had a higher low, which is a compressing range, a range that's tightening up, and that tells us something. But the real question that I'm going to ponder right now is whether or not we're going to find any kind of support here at 1133, 1132 in the current area that it is trading. So the real question that we need to ask ourselves is whether or not these most recent moves and the move that we saw today in gold has really changed any kind of interim and long-term view. And it absolutely is affecting not only our short-term view of the market, but also our longer-term view of the market. And to illustrate that, I really need to pull up our monthly chart. And I've done just that. This is our monthly chart. It does have two different levels of Fibonacci retracement. It also has a major long-term Elliott wave count. And the key to this particular chart and the technical studies that we're looking at are two particular areas. The first area is where we found major support. This is a 50% retracement level. It comes in at around 1092. And it is a retracement from roughly $300 all the way up to the record historical top above 1920, call it. The second one, of course, is the second leg of the rally from 681 up to the record top just above 1900. Now that 61% retracement comes in at 1156. And I have said on many occasions that we really need to see the market trade above this point before we can really get bullish. But now that not only have we not been able to take that out, we have had 3 months in a row in which these lows have been tested. And what that did in terms of our current Elliott wave count is it postulated the fact that we've actually completed not only our A, B, C correction, which is down to here, but on our last C down, a 1, 2, 3, 4, 5, that's this V right here. So V, C, and 4 tells us that we should have completed this bottom activity, and then from there, of course, we would go into a major fifth. Well, that kind of model is being negated as long as this market stays under pressure. And as bullish as I would like to be and look at scenarios in which we could find support in this area, and traders, there's still some hope left, but currently we've got to be able to really we've maintained above the 1192, but now we've really got to get above this 1150 or 1092, excuse me. It's this 1056 that has absolutely eluded the market, because when we look at our last move up, we did have the market actually hit a high of exactly or just above 1156. Let me go ahead and pull this up. This is a very, very short term 720 minute chart. And when we look at this 720-minute chart, what is interesting is the first rally, of course, which was, call it 1071 to 1171, we genuinely came above the mark that we were looking to take out and maintain above on a closing basis, which was roughly 1156. Market comes down, finds support at 1100, but on this last rally, that is really where the market peaked, because this top here is just above 1156. I believe it is approximately 1157. We'll see with this crosshair, 1155. Yeah, roughly 1157. So it just came to that area, but absolutely could not sustain or hold this area. And to me, that is the most critical area in terms of our long-term view of the market. Now, that doesn't mean that we won't find some support and begin to try to climb back up here. But traders, we've got to see on a closing basis this market take out 1156, 1157 before we can get bullish in any way possible in terms of a long-term model in the market. So traders, yes, we do have gold under tremendous pressure. As I said, trading off about $13 on the day, over a 1% drawdown. But traders, in terms of the precious metals complex as a whole, this market has really done the best in terms of drawdowns. When you look at palladium, for example, off about 2.75%. When we look at platinum, off 3.5% almost. And then finally, silver trading off about 3.33%, off 50 cents on the day, well below 50 at 14.60. A tremendous sell-off in the market, considering that the market has really been range bound. Silver, more than anything else, has been totally range bound, has not been able to really cross above and move up at all, even when we saw platinum moving up, when we saw gold moving up, when we saw palladium moving up. Although silver would trade up in tandem, it would give it back on the following day, and you can see that as this narrow range within silver. Traders, we are absolutely going to let the dust settle here for a day or so before we take our next play in the market. We are under pressure. The question is, will we remain under pressure? Will we find support? And if so, where will we find support in gold? The next level is 1121. This has been Gary Wagner, wishing you, as always, good trading. I apologize for not being able to deliver that to you today. Bye-bye.